Is it inflation or just your imagination? Is the economic data even making sense or even useful at this point? Ultimately, what the Fed chairman sees in the economic tea leaves, or the morning oatmeal for that matter, is not within your control. However, protection of your retirement savings is in your control. If you think you may be falling behind in your financial goals, see the video description to access the free Inflation Retirement Calculator to make sure that you are on track. Also, please share your experience in the comments. To discuss the present economic environment and how investments in scarce and time-tested assets like gold and silver can help you secure your financial future, we will hear from macro analyst and investor Lyn Alden, economist, White House advisor, and author Jim Rickards, economist and investor Keith Weiner, and former congressman and activist Mark Finchem.
When this Morgan silver dollar was minted by the U.S. government, it was $1. Today, this same coin is equal to $20. And I think that we have all since childhood heard about the idea of inflation. What the IRS has figured out at the federal level is how to tax inflation as a gain. They call it capital gains because they want to say that you buy this with this. The truth couldn't be any further than away from that position. This is an exchange of one type of currency for another. Actually, it's a conversion of one type of currency for another because of a lack of trust.
We live in a system where we have a failing dollar. This is a feature, not a bug. The dollar is designed to go down. The Fed on its website says 2% per year, which they define as price stability. I wonder what Orwell would be saying about that. So the dollar is designed to go down at a steady rate. Why? As a free boon to borrowers. If you borrow money and then the dollar is going down, then what you owe the return of is falling in value. The longer the term of the loan, the greater the fall, the easier the burden on the debtors. And that is how the system, if I can use the word rigged, is rigged.
The central bank is really trying to kind of push back the tide. In a functioning society, we should be making some non-zero progress towards better productivity, better technology. And so around the margins, things should generally get cheaper each year, or at least certain things should get cheaper incrementally. And on average, in any kind of multi-year period, prices should generally be going down unless there's a war or some other shortage or problem that pushes prices up. But central banks, by their mandates, want to override that. They want to have positive 2% price increase. So even though things are easier to produce, they want them to get more expensive every year. It's kind of like a Sisyphus rolling the rock up a hill. It's like this constant effort. And so, they have to have money supply go up by 5, 6, 7% in order to hit, their CPI targets. And when that happens, we don't get prices going up in like a uniform way. You have things like software is still getting cheaper, electronics get cheaper, but things, that are actually energy intensive or labor intensive, like beef and oil and house prices, stuff like that tends to go up quicker on average over the long term than CPI because of this kind of constant monetary dilution effect.
Unfortunately, the dollar doesn't do as they would wish, doesn't do as their theory would predict, and it isn't steady or stable. It is not a simple mechanism for robbing Peter to pay Paul. So every trade has two sides. And there's Peter over here who's the saver who's lending his savings to something and expecting to get that back with interest. Well, he's the one who's screwed when the dollar goes down. And then Paul over here, the borrower, is the one who wins when the dollar goes down. Unfortunately for Paul, it isn't a steady, linear, monotonic, would be the term, progression of going down. It has wicked volatility to it. And as we see right now, the dollar is going up, not down, which means the borrowers are finding that their burden of debt is increasing, not decreasing. Oops. And they don't really understand their own system, and so they're running around worrying about inflation one day and then yield curve inversion the next, and the dollar index, and on and on and on with all this stuff. So savers, when they face this uncertainty, turn to the thing that they've turned to for 5,000 years. It's gold. It doesn't have a risk. It's the thing you have when you don't want to invest or speculate and take a risk.
Just a quick interruption to say thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick mention and shout out to one of our sponsors, Birch Gold Group. With over 3 decades in the industry, Birch Gold Group is one of the most trusted companies for gold investing. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free, with endorsements from respected and renowned voices across America and one of the lowest investment minimums in the gold IRA industry. Birch Gold Group makes it easy to get started investing in precious metals. To find out more about Birch Gold Group and how this trusted gold investment company can help safeguard your coveted retirement savings, see the link in the video description to visit Birch Gold's official site to receive a free gold investing guide. Also, check out our video review of Birch Gold Group by clicking the link in the top right. Now, back to the episode.
There's been this quiet theft going on over time. You'll notice the document that has a house, has eggs, has hard money, and then has fiat currency. I find it interesting that in 1957, a 1,600 square foot house would cost roughly the equivalent of 37,700 eggs, which would be 13,500 silver dollars, which in that day would have been 13,500 silver certificates. Now today we move forward to, and this is just 2007 because this is when this was prepared, that same house would still cost the equivalent of 37,700 eggs, and it would still be roughly 13,500 silver dollars. However, in Federal Reserve notes, it would be $175,000. That's called inflation. So when somebody takes that $13,500 in silver dollars and exchanges them for Federal Reserve notes, the IRS says that that's a taxable event.
Kind of like how bloodletting used to just be this like very common medical tool. It was just kind of assumed that if someone has a fever, this is what we do. And of course, now with better knowledge, we know that outside of certain conditions, it's not helpful. And I think that this era is going to be looked back on in kind of an interesting way. It's like central bankers were purposely trying to always smoothly grow the prices of things that are actually should be getting cheaper.
Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business needs to ask themselves? Are we growing wealth or losing wealth? And how do we measure this? Gold is that tool. With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. An often used criticism for holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a gold investment company that unlocks the productivity of gold by offering a yield on gold paid in gold. Monetary Metals delivers interest on gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows your total of gold ounces held. To learn more about Monetary Metals and their innovative investment products, see the link in the video description. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.